that if they talk about CVP analysis, there are very important formulas we're supposed to remember, because cost volume profit analysis is all about profit planning. And profit planning, of course, we said our profit will be equal to total contribution, minus what here? Minus fixed cost, So this total contribution, if you remember very well, total contribution will be obtained like this. Contribution per unit multiplied by number of units minus fixed costs. Very, very important. Then we have, of course, this is whenever you have sales in physical units. Sales in physical units here. Sales in physical units. How about when sales is in form of money? When sales is in form of money, whenever sales is in form of money, our profit will be equal to CMR times revenue minus fixed cost, like that. So you take CMR minus fixed cost, CMR times revenue minus fixed cost, where CMR stands for contribution margin revenue, also known as the CS ratio, also known as the CS ratio, contribution margin revenue, contribution margin ratio, sorry for that. Contribution margin ratio, also known as what here? The CS ratio, also known as the CS ratio. So in short, to get this contribution margin ratio, we take CM over price. We take contribution margin over price, or total contribution over total sales, and that's the reason we are talking about the CS ratio. The reason we're talking about the CS ratio. So this is before we talk about break-even analysis, this is really a very, very important aspect of our CVP analysis that you must always be knowing, Now, please look at this November 2017 question number 1, boy. So this November 2017 question number 1, boy, reads, Sorry Limited. Sorry, quite a bad name. Don't call your companies. Some of these names are not very good. Sorry Limited produces and sells 3 products, A, B, and C. Sorry Limited has contracts to supply products A and B, which will utilize all the specific materials that are available to make these 2 products during the next period. The revenue that these contracts will generate and their contribution to sales ratios of products A and B are given there. Then they are talking about product C in the additional information. Product C will generate a contribution to sales ratio of 25%. The total fixed cost of Sorry Limited are 5.5 million during the next period. 3, the management has budgeted to earn a profit of 1 million. So required the revenue that is needed to be generated from product C for Sorry Limited to achieve the budgeted profit. Very, very easy. So what I will do, I have my metrics properly here. So we have revenue. For product A, B, C. All right. Revenue for product A, B, C. So revenue here it is 10. B is 20. Here it has already been given to us. Let's call it C. So revenue has already been given to us. Let's call it C. Then these ninjas, they have given me the CS ratio. 15% is 0.15, same as 0.15. We have B, which is 0.1. B is 0.1. And then C, if you look at product C, under additional information, they've given us product C will generate a CS ratio of 0.25. A CS ratio of 0.25. A CS ratio of 0.25. So they've given us total fixed cost. They've given us the profit which is being planned. to be generated. Now, please, I would want to take your attention here to draw your attention into this, that to get this CS, we've said CS is total contribution over total sales, over total sales. All right. So, you know, revenue is the same as sales. This revenue is the same as sales. So then if I'm the one doing this question, the very first thing I would have done here, because I have sales and I have CS, then I would also want to get total contribution. Because you see, I have CS here. I have sales here. What I don't have is the total contribution. All right. So then make total contribution the subject of the formula. Make total contribution the subject. So if you make total contribution the subject, my friends, what are we going to get here? My total contribution here will be equal to CS times total sales. So in that case here for A, it will be CS, which is 0.15 times total sales revenue of 10. Is there somebody who is able to give me these numbers? So give me here total contribution. Give me total contribution. For A, can somebody give me these numbers? So for A, we have 1.5. Thank you so much. How about B? They have given me the CS ratio of 0.1 times 20. 0.1 times 20, that gives me 0.1 times 20. Remember, the figures are in millions, right? So this gives me 2. We can just omit the millions here. Can omit the millions, yes. And then therefore, this one here for C, it will be this 0.25 times C, like that. Very, very important. Any student who was able to do this question up to this level was able to get every mark. And then I remember it's profit planning, because they have given me the profit that we target to make. It's profit planning ratio. It's profit model. So we know that profit basically, my profit here pi will be equal to total contribution minus fixed cost. So how much profit are they targeting to make, these people? How much profit are they targeting to make in total? Please forget that M. Forget the M. We are cutting the M, so we are cutting the millions. So the profit we are targeting to make is 1, which will be equal to total contribution. Please add for me this total contribution. If you add for me this total contribution, this will be 3.5. So this will be 3.5 plus 0.25C minus fixed cost. Is there somebody who is able to see the fixed cost here? Yvonne tells me 3.75. So this is 3.75. So please consolidate, put this and this like terms together. So this will be 1 equals 0.25C minus, who can take this, minus 3.75 for us. 3.5 minus 3.75. They're saying that fixed cost is supposed to be fixed cost. They're telling me fixed cost is supposed to be fixed cost. They're telling me fixed cost. It's given there in note number 2. Fixed cost is, thank you so much. Fixed cost is supposed to be 5.5 years. Sorry for that. 5.55. 5.55. So then can you kindly combine this? So this minus this will give me minus 2, isn't it? Will give me minus 2. 3.5 minus 5.5 will give me minus 2. So then take this to the other side. So this to the other side, it will be 1 plus 2 equals 0.25C. 3 equals 0.25C. Therefore, C will be 3 over 0.25, which will end up giving me what figure? Juliana gives me a figure of 12. So remember, this is a C. This is a C. You see this C. C, the one that is missing is the sales revenue. Sales revenue of C must be equal to 12 for these guys to get that money. For these guys to get that money, C must be equal to 12. Look at the question. Look at the question. They wanted us to give them the revenue that needs to be generated from product C for Sori Limited, to achieve the above budgeted what year? To achieve the above budgeted profit of 1 million, of 1 million, of 1 million, of 1 million. So is that a little bit okay? Is it now something that you guys will be able? Where do we get 1 from? It's given in the additional information. Look at Roman 3 of the additional information, or 3 actually. The management have budgeted to earn a profit of 1 million. 1 million. So I believe now that one, you should be able to do it pretty fast. You should be able to do it pretty fast. So then during prayer time, I would expect you great guys to do April 2022, question number 2A. April 2022, question number 2A. And of course, the students who are following me online, I would expect you guys to do what here to subscribe to my channel. Great. Thank you.